For more on this, we're joined by Nadia Elbilassy in Dubai. She is the Senior Market Analyst at Equiti Group. Welcome back to the programme, Nadia. Now, the yen has weakened to a 40-year low against the dollar. How concerning is this depreciation, and what's the potential for intervention from Tokyo?
Good morning, Taiba. Yes, global markets have been pricing an intervention, and it's not a matter of if we will have an intervention, it's a matter of when. I believe that this is because of the dollar pressure, and I think that the dollar will continue getting stronger. We do have a lot of things that we're waiting for, so there's a bit of uncertainty going in the market. We are waiting for the NFP data. We have 3 consecutive strong months of NFP data, so that will also impact the dollar. We have expectations of a rate hike also pressuring global markets, and definitely the AI trade still ongoing, so still also backing the dollar.
Yes, so tech stocks are rallying once again after a brief pause last week. What's driving this renewed optimism in the tech sector, and how much room does this rally have to grow?
I think it's more than just risky trades going on this week. I think it's the AI infrastructure confidence back into headlines this week with semiconductor stocks rising heavily. And I think that this is because of all the earnings that we've seen that have outpaced expectations. And definitely before a rate hike, there will be some risky moves in the market. And I think this is why the AI trade is still ongoing. We still see confidence in investors, definitely after SpaceX has renewed confidence drastically in the markets for AI companies and placed them on the front and center of technology stocks. I think AI stocks are outperforming mega cap stocks as well. So we are seeing this drive of risk sentiment into the markets again, especially as the US and Iran talks continue. However, the closure of the Strait of Hormuz will weigh on oil and definitely weigh on inflation once again, and this will be renewed tensions once again when we see renewed inflation headlines again.
And with gold prices declining for a 4th straight month now, is this start of a broader downward trend for precious metals?
Gold prices have gone down 12.8% in June alone, the worst month since 2008. I think gold investors are actually in a state of uncertainty. This is mainly driven by interest rate expectations. We have 61% expectations, according to polls in the market right now, that we will see a rate hike, but then it depends again on the economic data that we're about to see, especially on Thursday's NFP data. But with the strength of the dollar against gold as well, we are seeing a downtrend. I think we can see some consolidation in this area below the 4,000. Today, this morning, we recovered a little bit to 4,036, but we are still bound to see more lows if the current headlines still stem and still create the uncertain scenario for gold. We will see this consolidation around these levels up to 3,800. And also, big banks have started to mark down expectations for gold prices, especially if we're going to see a rate hike on the table.
Oil prices are also edging lower as investors weigh the possibility of US-Iran talks. Are investors optimistic over a breakthrough in diplomacy to end this war?
I think there's some optimism for the talks to continue, yes. However, this is still weighing on oil prices, especially if we're going to see peace talks and the reopening of the Strait of Hormuz. But currently, tensions are still getting high and relatively still weighing on oil prices. We are still at levels of 69 and 70. So I think that just more tensions will take us back to levels of 65. However, if the closure remains, this will impact the oil exports heavily and still will pour into inflation. And therefore, we go back to the same cycle of rising inflation, oil prices being weighed on. But however, they could see some let's say, consolidation at around 70 and 75 levels if the Iran talks, they still go on for several weeks.
Nadia Elbilassy, thank you very much indeed.